Thank you, everyone, for joining us today.
Afternoon.
Afternoon, yes. We are here to talk about banks, misconception to partnership. So a lot of people think a lot of things about banks. We happen to love banks, so you're going to hear a point of view about how much we love banks and how much we love working with banks. So if that's going to offend you, you might want to leave now, but we do really love banks. We were here last year, and we're one of the few fintechs that was here last year that's actually focused on storing money instead of moving money. And we got a lot of questions from some of the various people about what it's like to work with banks, because many people that are working in payments may have a slightly abstract view of their bank, and we're working directly with them. And that's really what led to today's talk, us to come and talk to you guys about what it's like to work with banks across the board.
So a quick introduction. My name is Curtis Whiting. I usually am the tallest person in the room, but not today. Got two folks who are taller. I'm from Austin. I've got some kids and grandkids that are a big part of my life. Love working on cars, and I've been in the software space for about 15 or 20 years. Also want to do a quick introduction on ZSuite that we spun out of a bank about 5 years ago. And we are right around 100 bank partners that we work with. Our primary customers are indeed banks. And we have most recently launched a product called ZSuite in the last 3 years.
So, my name is Aaron Junod. I am from Connecticut. Some people want me to be known as the fintech pirate because I often have birds on my shoulder. I've been in SaaS fintech for about 20 years, about 10 of it working directly with banks. And I'm an old technologist, so if you know what any of those terms are, you're an old technologist with me as well. And here's some proof. The birds on the Moov logo, they are usually in our meetings. And it's surprising that many banks don't, well, some banks really act negatively, but many don't. So today we're going to talk about 4 things. What is it that banks do? How do they operate? How do they integrate? And what's it like actually partnering with banks?
So to kick it off, the theme that Aaron started off with around banks, that a lot of times they're seen as ones who we're not sure what to do with, that on the one hand they're helping us, on the other hand they're kind of scary and worrisome. But we want to try to allay some of those fears and make sure that you understand that working with a bank is both feasible and a good thing, depending on what type of a situation your fintech is in. So to start off with, some very basic ideas around banks.
Oh, wait, before we get started, we also have a number of these awesome SFTP t-shirts available. Anyone that asks a question, come up to the front of the stand afterwards and you can have yourself an SFTP moves all of the money t-shirt, unless you already have one, because a few of you out there already have one.
Calls back to last year for those of you here for the Mets talk.
That's right, Ben Metz last year in his talk, in his keynote, if you didn't watch it, it's a phenomenal talk. And he was talking mainly about how all of the money moves on IBMs, but he also said all the money moves on SFTPs, and it does. All of the money moves on SFTP.
Okay, so we'll start off with a couple of questions, see if anybody wants to take a stab and get themselves a t-shirt. First off, what makes the U.S. banking system different, specifically different than other countries? Anybody want to take a stab? Help us out.
There's more banks in the U.S.
More banks chartered in the U.S. So you wanted to add?
I was just going to say, compared to most other developed countries, we don't really have good, like, national real-time payment system.
Payment system is different, very different. That's a great comment. Yeah, James.
Hyper-fractured core infrastructure.
Hyper-fractured core infrastructure. We're not going to talk about that too much. Good one. Good. Yeah. So
a little bit.
The banking system in the United States is very different than the rest of the countries in that there are a lot of. It's not just a little bit. It's significantly different. We have thousands of banks chartered in the United States, and any other country there's nobody that's even close. They're in the hundreds at the most.
And what I really love about this, and why I love working with banks as well, they're all different sizes, but when you're working with that small bank in Nebraska and you're putting your money in that small bank in Nebraska, it's loaning it right back into Nebraska. And that's one of the big differences. Your capital stays close to the banks because of the number of banks and how they're situated and our different regulation across the different types of banks.
So that leads right into the dual banking system idea, and we have a really neat picture of a map up there with all the different states. Anybody want to take a stab at a dual banking system?
Credit and debit.
Say it again.
Credit and debit.
Credit and debit, the dual banking system. I wasn't going to go there. Anybody else want to take? James wants to say something. Hold on, James. Not yet. Let's have.
There are state and federal and
Hey.
combinations of the two. So there's like 5 different bank types.
T-shirt for him for sure.
Yep,
Make sure you come up. So there's state chartered banks like Nebraska, and there's national chartered banks, and each of those different charters, they then have different regulators. They also then have different types of risks, the way that they look at risk and the way that they manage their business, the types of companies that they might work with. Where is Square? Where do they charter a bank? Utah, right? Like, there's reasons they went to Utah, and we have the fellow Utah person here. How about for commercial clients and or fintechs? We kind of just led into that with Square. Any thoughts on how commercial clients or fintechs are affected by the dual banking system? I'll just do this one then. That the way that each commercial client, some commercial clients that are maybe common across all the states. For example, an attorney, they're going to want to work with a specific type of bank, as opposed to, for example, a credit union that is comfortable working with attorneys and the types of deposits that attorneys have and want to be able to put and manage in a bank. Whereas maybe somebody in an airplane type of a vertical, they may only look for specific banks in specific states, or maybe they want to look only for banks that are national, right? Depending on the type of business that they're in. Difference between a bank and a credit union? Taxes. Member only. Yep. Member owned, very good. Yep. Whenever you're talking to a bank, you're okay to say a customer, but when you're talking to a credit union, you should say member.
Oh, they get so offended when you get it wrong.
Yep, right. And they don't like each other. It's funny. It's not funny. It's funny, not funny. I don't fully understand, but. And why is this talk mostly focused on banks? Because we work with banks, because banks specifically are involved in the type of verticals that we're working with and that you likely would work with.
And on top of that, credit unions, most credit unions are focused more on the retail side, not on the commercial side. A lot more banks are focused on the commercial side. So one thing, when we work with banks on the commercial side, but all of you also work at companies that have bank accounts, right? Angela Strange famously said in her talk and at the first one of these that every company will be a fintech, right? So even if you aren't a fintech and you're here, you're gonna be a fintech sooner or later. You're gonna want automation with your bank. So we're here to talk about the banks and how they're servicing their commercial clients. We hope to get more credit unions servicing commercial clients as well.
Last night at dinner, one of the guys that I was talking to, a fellow fintech, I was asking him how they're getting their money, the information about the balances that they're storing at the bank, and on behalf of their customers, and he was mentioning, we use Plaid. And he said, how would I even be able to get the balances and be able to understand this information from a bank? It was just this foreign idea that just Plaid's the answer, and this is part of why we're here doing this talk.
Because banks might be able to tell you that balance on an API. You might be able to get that from them.
So a couple of other just common, simple things about banks. On to the next slide. The most simple of things, but want to make sure everybody hears it. Banks, we think you know this. They store money, and they loan money, and they make money at it. Right? Very simply and straightforward. And so they want to have commercial customers like us and like everybody else, and they want to have retail customers if that's their focus, because they get the loans, they get the money, they make the difference, and they not only make interest income, but they also are then selling and buying different types of loans or deposits, and that leads into the non-interest income that they make, as well as they're making money perhaps on transaction fees or any other number of types of fees, checking account fees and savings account fees, and any of the, depending on the type of bank they're in, you'll see wealth management and other types of services that they're offering. because of the revenue they bring in on interest income, on the non-interest income side.
And this is important because the more you understand about how the bank operates, how the bank is thinking, the more that you can optimize your partnership with the bank. So I'm really understanding where they are in your relationship versus you.
Okay, a couple of important college-level data points that we need to practice really quick so we all understand how a bank works. We just mentioned the idea that that there's different sizes of banks and that there's credit unions as well, but when we talk about banks, one of the first things that we always ask when we're trying to understand what the size of the bank is the asset size. How many bankers do we have in the room? I think I see at least 2 or 3 that I recognize. Oh, there's actually several. Okay. Any comment on the asset size, any variation or another way of talking about that? Just simply is?
It also doesn't capture all of your banking activity.
For example, when you introduce yourself, you guys are heavily into loans.
So I work at something bank.
Yeah.
And I'm the CTO. So asset size would likely capture like commercial lending or deposits, but probably wouldn't capture a bank's BaaS or sponsor banking activities.
Certainly.
Yep.
Right. Yeah. Good point. Good comment. So then the other couple of data points that are important are that when a bank considers their profitability and or what type of if they're chasing loans or if that's the primary way that they consider their place in the market, they're looking at some data points such as their loan to deposit ratio to understand how much of their loans or how much of their deposits are out in loans, because they need to have those deposits to offset the loans. And so loan to deposit ratio is another really simple data point that we look at when we're considering bank partners. When it comes into the revenue that they make, they're going to be looking at their net interest margin. And that's where they're going to say, I'm bringing in deposits, it costs me this much, and I've got my loans that I've got yields on. And if I'm making 6% on my yields and I'm paying 1% of my cost of funds, then I got a net interest margin of 5%, right? That's very basic, I know, but important, basic stuff that you just kind of have to listen and hear. The other way that banks make money with fees and whatnot, one of the ratios they look at is their efficiency ratio, and that's where they're trying to understand how much does it cost me to make $1. So I take my revenue and I have a denominator of my non-interest expense, and then banks compare themselves to each other and they say, here's the benchmark, or here's how well we're doing. And I'm just going to stop there. Any other data points or any comments about these data points from any of the bankers in the room? All right, good. These are good starting point data points.
Exactly.
Comment?
No.
So the other topic related to profitability, we've talked a little bit about commercial type customers and commercial deposits, but wanted to make a point that when we're working with a bank, we're working with the treasury management area of the bank typically when it comes to as a fintech and or the types of customers that we're supporting in specific verticals. That treasury department at the bank, which typically means it's a bigger bank, not a credit union. They don't have treasury departments typically, right? And so we find ourselves working with treasury departments and their commercial clients, and we mentioned specifically support staff because depending on how automated that bank is, they're going to have a support staff that's equally, that solves whatever problems the automation doesn't. Sometimes it can be very big, sometimes it's smaller, and so that's just a part of what we experience. Sometimes your software would be replacing those manual steps.
All right, so now we're going to start to talk a little bit about how banks operate. Banks are ultimately service organizations. They are providing a service to their customers. They provide that service both in person. We've heard about the demise of the branch, but there's one, regulation reasons, and two, a lot of customers do like to walk in, especially some commercial customers, because you guys should have relationships with your bankers. And digitally, this is the primary means that anyone interacts with their bank these days. Most banks are buying all of the software to actually provide their digital experience. Not all banks, but many are, which also means that banks are inherently integration organizations. They are dealing with the complexity of a number of integrated products to actually make the bank function. And it's kind of difficult. So banks are also highly segmented organizations. So as you start to approach working with banks, recognize that upfront. Be prepared and calculated how you communicate with your banks. Know what your questions are. Don't walk in unprepared. Things are going to go much better. And because they're highly segmented, you're going to want to build relationships with every department that you're going to be interacting with, an individual relationship, because you're going to need something from one of these other groups, and it's how you're going to get it done. So don't expect to just have one primary point in any bank. Definitely try to continue to build your relationships and utilize that. And then we're going to talk a little bit more about the core in time, but pretty much every bank has a core, not every bank, and you should really consider their core vendor as part of the organization structure of that bank. You likely will not be able to communicate with that core provider without the bank there. They will also be one of the most difficult employees to get on the phone and to move them forward. Plan for it. Like, it is the reality that we live in. We love our core providers too, but they're big companies servicing a lot of banks. Plan for that difficulty.
Good time to stop. Any questions or comments at this point?
Just coming from a bank, that is like the whole building it with each department is so true. Because like, I can't tell you how many times I've said from a technical point of view or from the IT department, you have to say this, but you have to go to that department to figure out the other answer. So I love that.
I love that you didn't even say the word compliance when you were talking about that. Thanks.
That's good input from a banker. Thank you very much. I really appreciate that. All right, so bank integrations. Banks have complex digital ecosystems. This is a big kind of 300,000 foot view of many of the systems that you're going to see in any typical bank. We're going to dive into each one. So first you have the interfaces that the bank actually uses to manage the systems. So they have their core interface. Every core is going to have an interface that the bank employees live in. Additionally, they're going to have CRM. Many of our banks live in their CRM. The CRM is often purchased from their core provider. Sometimes it's Salesforce, but more often than not, it is from the core provider. And then they have teller services that their tellers are working in. So there's others as well, but these are three of the major surfaces that these are likely all different contracted pieces that are integrated together, because remember I mentioned banks are integration companies. Sometimes they may buy them all from the same person, and they still have to be integrated. So then there's the customer interfaces. So this is me, you, other commercial entities. We have online banking. This is what we're all used to logging into, digital access, mobile. This is also the kickoff place for SSO. So for example, if any of your fintechs are looking to extend a relationship that the bank already has, maybe if you think about a bill pay relationship in the form of a consumer, or with our product, a commercial user logs into cash management and SSOs into our product. So that's your entry place for any of your products to extend that bank security, which is a wonderful thing to do as well, because you don't want to manage credentials on behalf of banks. Don't do that. It's bad. It's bad.
A few good head shakes and then good.
So then cash management, this is for business customers. It is basically online banking, but for businesses. Typically, everyone in this room, personally, you have a few accounts. Most of the organizations you work for have a chart of accounts that's much larger. So the cash management systems in a bank are really targeted towards those commercial entities that need to manage large charts of accounts with very complicated workflows with it as well. But that is a separate product in most banks, and not all banks are running cash management either. It's if they are focused on commercial clients. And then origination is another major interface that everybody sees. If you need to open a loan or if you need to open an account. If you talk about 10 years ago, most of you would have been walking into a bank and signing a piece of paper. Where today, you can digitally originate with almost every bank, depending on the type of account. And that's awesome, right? Because none of us want to go into the bank for something like that. If I'm going to go to a bank, I got a problem I want to deal with. So next is the data layer. We all know, or every bank has a core. The core is the general ledger inside of the bank. It basically stores all of the accounts and all of the customer info. All of the aspects of things like compliance, regulation, all of that runs off of the core, transaction monitoring, for example. Cores sometimes offer APIs, sometimes offer middleware. More and more banks are adding middleware, but there's going to be an increased number of banks that are offering an API, either directly from their core provider, from a company like us, or from a different BaaS company as well. So understand that when you go to talk to your bank, you might not be limited to Plaid. You may be able to talk to them about more advanced options that work directly in their ecosystem, and there's plenty of banks out there that can help you with that. And then reporting. So banks have as I said earlier, it's an integration system with lots of different systems. So the banks will typically take all of the data and put it into a BI system, just like many organizations do. Like, this isn't magic, it's not special. But just know that's a part of most of the banks, and you can get to that data, because cores are not a query engine. You're not going to go asking a core for a really complicated query on go find me these transactions. You're going to ask a reporting database for that because it's made for it. And then under the covers, we've got a number of services that the bank also has to support. Excellent. A number of services that the bank also has to support. So as I mentioned, compliance, these are other systems that they also buy and integrate. Remember, they're integration organizations. Many banks are offering more and more payment features as well. So like Curtis mentioned, he was talking with somebody that was using Plaid. You may be able to get around Plaid or Stripe and go directly to your bank and get some of these services directly from them. You don't necessarily need to deal with an intermediary. And then they have services for risk analysis across all of their various operations, and then for loans as well, the servicing of loans, which is super complicated. Any questions before we dive a little bit deeper into the core, which is typically where most of the questions land? All right, so what is a core? In many cases, it is a relic of the past. Most of the cores that are in production today were built before the internet. And in fact, core stands for Centralized Online Real-Time Exchange or Environment. They were created to link bank nodes before the internet existed. So that's why they're still there, and unfortunately they hold a bunch of logic, and it's really expensive to get rid of them. But we do have some more modern cores and some more modern core providers as well. But just because it's on dated technology doesn't take away from the fact that they do their jobs insanely well. Cores are very, very good at what they do, which is why they're not just immediately being replaced with more modern technology. And it is the center of the bank. Everything runs through the core, everything. That's just the way it is, and banks are very core-centric. They like to hang out with banks that run the same core. Like it's almost a tribal thing, because there's very much there's differences between them, and then like your Python developers are gonna go hang out with your Python developers, right? Your DNA banks are gonna hang out with your DNA banks. That's just how it works. So. And then compliance and regulation are a big part of core banking, and they often have connectivity challenges. I'm sure many of you, when you think about connecting to a core, you may be thinking EDI files, you may be thinking green screens. There are a lot of more modern options that are available to us as an ecosystem these days. But don't discount those files, because those files still work, and batch operations in bank, it's not a bad thing. Like, it works really well. Don't discount it just because it's on an API. You don't know how many times I've been on a call with either a bank or a fintech, and they just want API, and you're like, well, why? No, I can do it in a file. But so don't be afraid of the file. Files are great. So as I mentioned earlier, I have these t-shirts. So many of you have asked questions. Anyone that's asked a question, come on up. What's interesting is all of your money all your money belong to SFTP. It's an old reference. I hope somebody catches it. Every dollar almost moves on SFTP under the covers. Every check, every wire, every ACH, you're creating files, SFTPing to the Fed, and it's like all the money moves through SFTP, and as Ben said last year, it all settles on an IBM as well. So don't forget that. It's weird, but it's true. Banks are integration organizations. Again, they're core-centric, so the core's capabilities actually drive what the bank can do, which is what drives them to go between different cores. They may want to start servicing a new vertical or a new segment of the market. Their core can't support it, so they need to go up market and get a bigger or better core. One thing that we haven't mentioned yet, cores are typically sold in the US at least by, let's say, 6 or 7 primary companies. It might even be less than that. So across the ecosystem, you're not dealing with 55,000 different cores. It is a small number of them.
Though you are typically seeing various flavors of a specific core that can feel like different cores.
Yep, and as I mentioned right there, most of them are licensed by less than 10 companies worldwide. And build versus buy, most banks are not really building. They are buying. There are some exceptions. Wells Fargo is a famous exception of a bank that builds almost everything in-house, although they have been buying more and more, with some not so successful events. Many banks do have internal reporting. So as I mentioned earlier, they have that database, and they typically have people that are very accustomed to asking for data out of that database and sending it to people on files. Remember, don't be afraid of the file. So if you need to get something out of the bank, it's usually pretty easy to get the reporting person to give you a file on an SFTP. It's not crazy. You just need to convince them that they need to do it. Then you can get it.
It's typically a part of the answer that we give to those folks who we're talking to at FinTech DevCon when they're trying to figure out how could I work with a bank. It's, hey, you might want to start with a file. Just saying.
And then when you're dealing with the bank's vendors, expect to work with them directly unless it's the core vendor. The core vendor is, they're typically a little bit more gated, but you can build relationships with some of the other vendors that they're working with at an event like this as well. But it is very possible to actually start to build those relationships and deal with those vendors.
Do you usually like buy multiple cores or one core for one bank will be sufficient and they can communicate with other cores?
So most banks have what they call a primary core, like a main core. Some banks have started to add side cores for different things. So there's been a increase in what they call neobanks or de novo banks. So you may have a bank that uses a company like Nimbus, and they basically put a side core out, and they'll have a customized experience for a segment of the market. And in those cases, behind the scenes, they have to start aggregating that data together for things like reporting. Because let's say you have somebody that's on both sides, you now have interest responsibility to the IRS on the aggregate of the accounts. So whenever a bank does bring in a second core, there's a whole nother integration where you have to start to think about, well, now I have 2 ledgers and I have 1 reporting, and what am I going to do with this? How am I going to deal with that?
Yeah, one question back here, and then we'll come up here.
It's more of a comment. Cores are also really, really expensive. So a lot of banks, if they are coming into this world, they will make side cores, but they're not really side, they're on top of. So they have still have the regulatory core because that's required. And they can have all these NEO accounts, which is high volume NEO traffic, and segregate that into single GL accounts on the core. So your product is 10 accounts on our core and 100 million accounts, in this NEO system. Keep going. Because cores are very expensive and it's only 10. So
Yeah. That makes a lot of sense. That makes a lot of sense.
Yeah, that's
We
like
do a similar thing.
Some subledgering, right?
Yep, exactly.
Yeah.
I'm sure this is very rare if it's ever happens, but I wanted to ask, have you run into any banks with like some proprietary core they build for part of their business or something like that?
Yeah, absolutely. And not in this position yet. I think in this position, every core that we've got is from one of the big vendors. But in my last role, we worked with a bank in Missouri. It was an 8-bank network, and they had built their entire stack, and it was good. It was real good. Yeah. They had their own core, not the entire stack, but it was very good, and I really liked working with that bank. So, like I said, most banks don't build, but some do, and some of them are good at it.
We do have one core that we worked with. It's a startup in the last couple of years that was it was a whole experience because they were in their early years, and they didn't even have, I think there were less than 10 banks on it.
Yeah, I think so too.
Yeah.
To add on to this comment, the way a lot of core providers charge banks are per account that are on the core. So that's why a bank will do something like, they'll use the term like FBO or omnibus, which is one account on the core. The under the hood might have millions or tens of millions of accounts for, if you're a fintech working with the bank. The bank's not going to put all those accounts on their core because they would have to charge you a lot more because they would have to pay their core
30-second sales pitch. That's exactly what ZScrow does.
Yeah, and maybe
We provide that feature to the commercial entities for a bank. I'm done. I'm sorry. I'm not supposed to do sales pitches.
maybe one other comment though, that those service providers the bank will want to move those accounts into an omnibus or something like that for multiple reasons, interest and statements, but also you mentioned cost. The cost per account can vary, but also the manual nature of adding those to the core can be more difficult than adding those to that fintech. So that's one of the solutions that fintechs can provide that makes it a good reason to put it on the fintech.
It's a good one too, yeah.
Thank you. Any other comments on that? Hey, one more.
Do you see any trends in banks leaving certain cores, moving to certain cores, or leaving legacy cores, moving to more modern?
Sure.
I don't watch that enough to be able to recognize any trends. Personally, I know there are people that watch that. I did see a news article on one of my bank rags that FIS appears to be gaining ground against some of the other major players in the market based on recent sales, but I don't track that myself.
You may already know this, or there's going to be folks in the room who know this, that the banks moving a core is a monumental, beyond monumental task.
Yeah.
So everybody, when you move from this core to the next core, there's a good reason, right? Very good reason, cost and functionality, and some of the bankers are smiling.
Yeah. Think of the worst architecture or re-architecture you've ever been on, and then multiply it by 10, and that's what it sounds like a core conversion sounds like. It's awful.
Just a comment, one thing we've seen, we call them zombie cores they're kind of like a core provider may have a bunch of different versions of their core, and they have one that's like, they're just kind of deprecating it, and they're like dropping services from it one by one. Mm-hmm. I feel bad for the banks that are stuck with, they have to move.
That's good comment.
Yep. Maybe crossed our paths with one of those recently. So on the compliance big rocks, we've mentioned that the core does a lot of compliance. There's really two major aspects of compliance that the bank is going to be looking to do with their commercial customers. It's know your customer or business, and they need to do this with everybody regardless if it's a commercial or retail customer. They need to understand, this person isn't on any lists that are preclude them from doing business with U.S. banks. Make sure they have to know their customer. That's part of the deal. And then they have to do transaction monitoring. And this is really where a lot of the anti-fraud comes in now. And if anyone, there's sardines in the back of the picture, because if you didn't see the talk earlier from Soups and Sardine, it's fantastic talking about some of the different vectors that they're using for transaction monitoring and fraud detection. But basically the game is, how do you find fraud before it happens or as it's happening?
And this will happen in-house by a bank, and or they'll also put it out on a third party, and both of those will have different benefits to the bank and also to us as as a fintech is working with a bank. They'll often ask us to use their AML or their system that's doing that, and so we'll have to be able to integrate not only with, for example, a core, but also potentially, depending on what type of services we're offering, with a compliance company as well.
And then a big topic these days is the middleware. So we've got middleware from the bank. Many banks are offering APIs directly to their customers. This is where you would actually go to the bank and you're going to deal with them, and you may have a vendor like us on the phone as well, but it's actually on the bank's paper. You have an agreement with the bank and an actual partnership with the bank. And then the other model that's under scrutiny these days is with a BaaS provider. As was mentioned earlier in the keynote as well, I personally suspect that we're going to see this. There's too much activity with BaaS providers for us just to cut them off. So we're going to figure out how to make this happen. But you guys can go to the bank. You don't need to go to a BaaS provider. You might have a better cost profile as well.
Maybe one note to make here is that we have that when we're connecting to a bank, it's typical that we're connecting directly with that bank, and we've got either we're doing it via extracts or we're doing it via an API. This middleware we expect to solve a problem, and so they can be very good and can represent many cores, and we connect once with them, and all of our problems are solved as it were. That certainly is the hope and the expectation. So there can be real benefits here. There can also be challenges, as you would imagine. I think it's just worth noting that in the fintech space, middleware can both be really, really powerful and can be a struggle. Sorry, go ahead.
Yeah, from scalability point of view, have you faced challenges with core not able to support data in and out from API requests?
I've knocked over a few cores in my day.
How do you solve that?
Throttle. It's typically on the gets. It's typically not on the writes. You typically write very fast, but they're not query engines. So if you ask them for too much data, you knock them over, and bankers aren't happy.
So you end up building cache layer on top to mitigate some of those issues?
Well, earlier when I said trust the file, I try not to call an API at a bank to get daily transactions for an account, right? Like I need all of the transactions on the accounts. That's not the best scenario for me to be polling the bank to get that data, unless they have a setup for it. Like if they have a setup for it, we can do it. But when I ask core providers directly, hey, I want to do this, they're like, yeah, don't do that. So that's why we get those files. And remember, most cores close once a day, right? Core closes, let's say midnight. You know everything that's going to happen for the next day, so you can just take that data out and give me a file. I don't need to query you because it's not changing throughout the day. Some cores are closing intraday, so that's not always the case. But so yeah, it's typically on the gets.
Next year, we're doing a talk on real-time transactions on the core. Come next year.
We are?
Just kidding. Go ahead.
How do you see the regulations for these illness with the recent events?
Yeah, make sure that your bank knows what you're doing. I think that is the biggest thing. Like, when I look at the ecosystem and what's happening, where things are going off the rails are where fintechs haven't been transparent with their banks, where things have been gotten out of balance. Like, be transparent, understand like whose paper it's on, try to work directly with your bank and give them the ledger. Like, in fact, better yet, don't run a ledger, but give them the whole ledger. Because if the more, like our banks are very interested in reconciling with our customers. So we have standard processes to make sure that all of the money in our accounts is actually reconciling and we can account for every part of it. So when that regulator comes knocking and says, hey, what's that fintech doing? My bank can run a report and say, here's everything. So just make sure that you're as transparent as possible with the bank because they have to be as transparent as possible with the regulators.
Go ahead.
I think it goes back to your previous slide, like the bank is on the hook for the KYC, KYB, and also the data bill, right?
Yeah.
Yep.
That's where bank thinks about third-party and fourth-party risk, right? Like your fintech might have a great product, you're sourcing customers, there might even be third parties in there, but the bank is always ultimately responsible for the regulatory and compliance aspects of your business. So that's why it's really a partnership
Yep.
to make these successful.
That's a good point. To echo that back, the bank is ultimately responsible for the KYC and the transaction management. So it is their responsibility. So when you come in and as a fintech and you start doing things that might not be kosher with the bank, they're on the hook. So that's why they have to take this stance and why you should be as transparent with your banks as possible. So things are changing. 10 years ago, this talk would have been very different. For me to connect to a core, I would have contacted the core. I would have paid them a sow to get the docs. I would have read the docs. I would have paid them every time I needed to ask a question. The API more than likely wasn't modern. JX is pretty old these days. It was pretty modern for a while. So it's changing though. Banks understand the relationship and the value in the relationships with the ecosystem. They are upping their game on technology, and it's like, things are changing. Go talk to your banks.
So that is our piece on bank integrations. We wanted to do one last piece on banks caring about their customers. I hope you enjoy our AI image here.
So remember, banks are service organizations, and they are intrinsically driven to bring you and everyone else that they work with success, right? Because if you go way back to the beginning, banks make their money off storing and loaning money. So if you as a business makes more money than you did last year, your bank's happy, right? So they're intrinsically driven to actually help you grow. And community and regional banks are specifically intrinsically driven to grow their communities. So even if your commercial entities can't bank locally, you may want to. Just keep that in mind as you think about our banking system.
You're welcome, banks.
And banks are risk organizations. So as we mentioned a couple minutes ago, they are on the hook for all of the KYC and all of the AML. So understand that as you deal with them. And ultimately that means they can help you with compliance, they can help you with regulation, and they can help you reduce risk. Go talk to them. Let them understand what you're trying to do. Like, I'm on these calls. I'm on the call with the fintech, with the banker, and we're brainstorming on how to do it better. And it's awesome.
They've definitely reduced work for us by them because they've already done it.
And banks have rich ecosystems. They want not only your business, but every business to succeed. So again, the more you talk with your banker, the more they may be able to refer you to other people that they work with to help you solve your problems. Like, know your bankers. They are part of your community. They're like, if you don't take anything out of this, go learn and talk to your banker. They're here for us. We really, really like working with our banks. I haven't worked with banks my entire career. It's really been the last 10 years. And watching banks deal with their customers and their communities is really an inspiration to me. So I really have, I find myself lucky to work with banks. So. Any questions?
Any questions? Please.
Where do credit cards sort of sit in the ecosystem? Are they built in? Does the core handle it? How does Visa Net plug in thing? Is it a separate system?
Separate system, yeah. I personally don't deal with that side of the bank. I'm not sure if anyone in here has a better answer. I know it's a separate system. Sometimes they do take the data from the merchant network and put it in core, but the processing typically isn't on core. I know there's a few
James
people.
wants to take a stab at it.
Almost every core provider is going to have some other organization that they either built or bought, and that's your issuer processor. And they're thinking about things like the card networks and how they're using the card network for validation of your transaction, and especially as it relates to the other person's bank. And so the acquirer is part of that payment. So the bank itself will eventually have the transaction on there, but the card systems are totally separate. And sometimes bank core APIs and infrastructure have simple connections to card programs. So you can go to a banking hub, like you can sign up today for Jack or FIS banking hub access, and you can do some things with card, but not everything. And so then you have to get into the right people, and it's kind of hard to do.
Yeah.
It's hard to do, and it's double hard to do when you're trying to get into the deeper parts of the card program.
Yeah, we're doing kind of the same. I'm not a technical person, but we are working with the card provider, credit card, and everything has to go through Bicep, with the code provider. So, everything has a conversation with the card provider and with the technical people.
Good question. Shirt for you. Yeah, please.
You joked about real-time payments earlier. Does that mean you're pessimistic about adoption, in the semi-near future?
No, it was primarily focused on the fact that receiving data from the bank via extracts is a lot easier than the API integration and the problems that solves or doesn't solve. And it's really also focused on the fact that the core only refreshes, most cores refresh once a day.
What about the RTP and FedNow rails? Those are real time.
As we start to see adoption on the other side of the market, then that'll be interesting for us as well. We are very interested to see where that goes. And we are bullish on real time as well. Although most cores are closing once a day, it is a big user experience enhancement for our platform to be able to close that loop. So when you see that pending transaction from that real time transaction, that user gets that feeling that, oh, I just did something. So it's that bit of confirmation. So we are very bullish on real time with the cores. But again, the money's not really moving under the covers. Some of our cores do move it immediately, which is nice, and we handle that as well, and I'm hoping more and more, especially on us. On us transactions move immediately, which means between two accounts in the same bank.
Yeah, yeah. Please do hear that we do play in that space, and we're bullish on it. So.
Yeah. And also, as a follow-up, if anyone has any questions after this too, please feel free to contact us and reach out.
We're about at time. Thank you very much for attending. Love to chat. And if you need any help with this reference, I'm happy to give you some help with that as well.
And even if you didn't ask a question and you want a t-shirt, there's about 10 or 11 of them, so I don't want to leave with any of them. Thank you, everyone.